There are numerous red flags in the stock market. Asia, Europe closing lower, setting up tomorrow to be a volatile day in the U.S. This is Risk and Reward. I'm Deirdre Bolton. So far, 2016 in the same category as three stock market crisis years, 1929, 2000 and 2008. In August, the S&P 500 fell 10% from its highs. Another drop of that magnitude happened in January. So in just 6 months' time, two big market drops. If you're wondering what to do with your money, we have you covered. My market pros are here. Market bull, Hillary Kramer. Market bear, Jimmy Lee. Hillary, as our market bull, you're the contrarian. In the past 100 years, this has only happened 3 times. Start of the Great Depression, tech bubble bursting, financial credit crisis year. How can you still be bullish?
Because corrections do happen. We have had quite a run over the past 7 years since the 2008-2009 crisis. We need to let some air out of the balloon. There's been a lot of excess created by the Federal Reserve. This is nothing like 1929, which was fraud. It's nothing like 2000, which was technology and really based on one specific sector. And it's certainly not a financial crisis created by $7 trillion of insurance that's been sold all over the world, and no one knew how they were going to pay it out, which was 2009.
Hillary, thank you for going through that point by point, all of them well made. Jimmy, picking up on that, even if it doesn't look like those 3 crisis years, at least according to Hillary, should investors take some money out of stocks, put more in cash, put more in bonds or gold? Because even if maybe the reasons aren't there, sentiment feels very, very skittish.
Well, actually, on the short-term basis, Deidre, I think that the market from this point on to the end of this year, I think I'm actually a little bit of a bull. Longer term, I'm a little bit concerned, but I agree with the last guest in the sense that I look for 4 things when in terms of looking at this decline, and can this turn into a recession, which is what everybody's talking about. First is employment, and that data actually suggests the opposite. So it looks like the employment is actually very good for this late stage in the business expansion. Second is there a bubble in stocks? Are stocks trading too high? And we're back to historical levels now on the price to earnings ratio. And as far as are clients coming to me and buying stocks in a euphoric state of mind, I can tell you that's not happening for sure. Don't fight the Fed. Now, the Fed did raise rates because they had to, but they signal that rates are not going to go up very fast, as we're not anywhere close to being an overheated economy. And so that's not going against us.
Right, and what this does is it brings investors, just like they've been for the last 7 years, it brings all investors back into the stock market because the rates are still low. You still aren't going to be able to make more than half a percentage point or 1% in a CD, so you're forced into the stock market.
Hillary, very quickly, you went through the reasons why you don't think this is a crisis year, but we didn't talk about China. To what extent there's a new report that many expect to prove, yet again, that the Chinese economy is slowing. We're all interconnected. Could China slowing be the wild card that maybe you're not thinking about right now?
Well, to a great extent, that's what has happened to us since the first of the year, is we have been pricing in what's happening in China. Clearly, there may even be negative growth in China. There's certainly been corruption, gambling, and now the cracks are so imminent. The only big problem is what happens if China starts selling all of their U.S. treasuries. That would be one of the only areas of concern for me, but otherwise, I'm not concerned. Money's going to flow to the United States because we have proven that we have transparency and the strongest economy in the world.
Hillary Kramer, well said. Thank you so much, Hillary Kramer and Jimmy Lee.